Today we have got 5 stocks that you could consider buying for good profits. Let's dive in. First one, we have got Disc Medicine. This company operates in biotechnology sector. It's a good pick for those looking for potential long-term gains. The chart has been in a downtrend for a while, and now it seems to have formed a perfect base. Observe carefully and you will see a rounding bottom pattern. The pattern has taken almost 2 years to complete the formation, and hence we are expecting a bigger impact on this breakout. Look at the volume bars as well. In the last 1 year, the volumes have been consistently higher than the previous time period. Let's change the chart type to line chart so that we can mark entry and exit points nicely. So our breakout line would come somewhere around 54. Now to calculate the target, let's measure the depth of the bottom and place it on the breakout bar. So our target level would come somewhere around 95. So now this is a massive return, which is somewhere around 76%. Because this is a fresh breakout, don't forget to put the risk management in place as well. So here we go. The stop loss price for this chart would be 48. So now we have got the stop loss, the profit target, and the buying price as well. If we expand on the chart a little bit, we could see there are potential second and third level targets as well that are available on the chart. So even if the first target is at around 75 to 76%, we can mark our second target as well. So the price for the second target would be somewhere around 125, which is great. And the third target would be the highest point of the chart, that is somewhere around 172. If you look at it in terms of the profit percentage, so that we have a potential of chart gaining us about 127 times the original buy price. This is the power of a rounding bottom pattern. Because it's formed after the downtrend, it gives us an opportunity to gain more and more. Second chart that we will be looking at is from a financial sector. It's called Merchants Bancorp. Let's zoom in and tell me if we can identify any pattern over here. The overall trend of the chart has been in the uptrend, and now can you see something happening over here? This type of pattern generally indicates that the trend will continue. So if it's an uptrend, it will continue in the same direction. If you were to assess the volume portions as well, you would see in the last about 7 to 8 weeks, the volume bars has been constantly increasing, and that has been a clear-cut indication that this is going to be in a continuation pattern. Let's mark our entry and exit points as well. So the breakout line would be somewhere around 33, and if we calculate the stop loss would be somewhere around 31. In order to calculate the target, let's measure the depth of the pattern, and that can tell us that our target would be somewhere around 45, which would give us about 33% of the profit. Easy? Third one on our list is Sherwin-Williams. Look at the longer term chart. It's always been in uptrend and recently had been into correction. So that is really great opportunity for us to dive into it. In the correction region, it basically went a little bit down and then it started forming a shape of a rectangle. It has been in a range bound, and just in this week it has started to give us the breakout. Let's check the volume as well. You can see that the volume green bar is really good on the breakout candle. Let's try and calculate what would be our target. So you can see if the breakout price is somewhere around 285 and our stop loss would be 265, and if we measure the depth of the formation of the rectangle, that would give us a target price of a range which is around 352 to 367, and that probably gives us a profit range of about 25 to 28%, which is not bad at all. More importantly, it's a large cap stock that gives us little bit of assurance in terms of not getting the trade wrong. Fourth one on our radar today is T-Mobile. It's from telecommunication sector. Overall chart formation looks pretty much promising. It's been in the uptrend, and now in recent times it seems to form a ascending triangle pattern. Can you spot it? This is also a large cap stock. Now let's mark our levels. The breakout price is around 150, and in last couple of weeks it's given the breakout. The stop loss level would be somewhere around 145, and look at the target. Let's measure the height of the triangle and add it to the breakout level. So our target comes somewhere around 199, which is pretty much giving us a profit of about 30 to 35%. So precisely it would be somewhere around 32%. And the last one on our list today is Fusion Pharma. This one is from health technology, and just to be cautious, this is a high momentum stock because the ATR percentage for this one is somewhere around 23 to 25%, which is quite a volatile stock. The chart has been downtrend for quite a significant time, and in recent months for about like 1 year, the volumes has been increasing consistently, and if you notice carefully, it has formed a base which is somewhere similar to a pattern of double bottom. Just to highlight one more time, the ATR percentage for this stock is about 25%, which means it's very, very volatile. So you have to be really careful with this one. Let's mark our levels. So the breakout price is somewhere around 4.94. The stop loss would be 3.97. And if we calculate the target, add the bottom range to the top of the breakout price, and the target range should be somewhere around 7.8 to 8.32. Now this is giving us a potential profit of 59% to 63%. From all these examples, I think it's vital to understand that whenever there is a pattern formed, and if you're able to identify the stock as well as the breakout price, it's going to turn you into a massive profit investor. That's the end for today, guys. If you have enjoyed watching today's video, give it a like and subscribe to the channel for more such tips. Until then, happy investing.